ideological phase of crypto is over. The phase of crypto we are in is in the institutionalization phase. We are in the mass adoption phase. And that means that you cannot be ideological to make money. You cannot be ideological when you think about your investment decisions.
This episode is brought to you by Zashi Wallet. You'll hear more about them later in today's episode. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.
We are live. Yet again, we keep promising people that we're going to have a prediction market to at least understand if episodes with or without Yano, like which one performs better. But we have been yet again abandoned. It's just you and me, Rob.
I don't think we've been abandoned. We went out and we asked, do people want Yano on the pod? We did this kind of like A/B testing. He wasn't here. He came back and everyone was like, no, we don't want Yano. So now he's gone again. Right. So we're just like, we're trying to do what's best for the pod, In these tiring times, ladies and gentlemen, we are doing with what we have.
Look, why don't we just get straight to it? There's a couple of things we want to talk about in the pod. Obviously, state of the market. It's been all over the place. Prices have just been quite volatile. Let's talk about that. Let's talk about MicroStrategy. I feel like I've fielded like 7 different calls from reporters saying, is MicroStrategy going to blow up? Are they a forced seller? What does that mean for Bitcoin? All these different things. I'm sure you've probably gotten the same. I heard from Haseeb, I was debating with him, a very lively debate that everyone should go watch on the Thread guy, whether L1s are overvalued or not. Not that we should talk about that here. I'm more interested because he mentioned something when we were pre-recording. He said that you guys hosted a founder event in your office. Robbie, you're looking surprised. I don't know if that was the case or not. I certainly didn't make the cut.
We did. It was like a founder dim sum lunch. We said like a founder event, and first time I was like, wait, what is that? No, it was like a white elephant, holiday lunch. So it was like very lighthearted.
Let it be known that I received no invite for said lunch. I have not.
Santi, what country are you in right now?
Rob, you didn't know that.
I
Inversion HQ is in New York.
I knew you were not in New York. You would have been invited. I promise. You are invited to everything else. You know that.
I was starting to worry there because I'm debating my lead investor on the pod, and I was like, man, is there a refund on the docs? I went through it. And I think we're good.
We're too far past. You can't get your money. I'm not making my money back. You're keeping it. So I also, Santi, like you're kind of, you're a healthy guy, right? And I didn't know if dim sum was right for you. I thought maybe it was like too many carbs. So
fair enough. But I heard that there was an interesting debate. One of the things that I think you guys do really well, you put great events. I've been at a few, but there's some chatter around like how do you measure? We're going to talk about prediction markets, as of course, that's like the new stable coins. But like, how do you measure a change in opinion? And in a perfect world, Haseeb and I were talking about this, is like, okay, in this case, it was like our L1's overvalued. You shouldn't measure like the who won the debate by the total vote of a poll. You should measure on how many people came in thinking that they were overvalued and changed their mind, and vice versa. Because I think that's sort of the measure of, and I think it was George from my team mentioned that he had been in one of your like debates and you did that. So I thought that was pretty cool.
Yeah, because you go into a lot of these things and people are, maybe like one of these debates that we did was around whether like DATs were good or bad for the crypto industry. And so we'll talk about MicroStrategy, but something like 70% of people just thought DATs were bad for the industry. And so, when you come into a debate with like that level of bias, like the person doesn't win by convincing from going from, 70 or 30% to 60%. They win by going from 30% to 40% because they were clearly able to influence more people than the other person was during that debate. So, which by the way, I saw a poll on your debate with Haseeb. Did you lose? Like what happened? Like talk a little bit about the debate.
The debate. So I've been writing more, really originally inspired around this idea of, hey, let's make sense of these valuations. If Ethereum is worth 380 billion, is it worth 380 billion? And, the fundamental, value investor that I've been pre-crypto, just that part of my brain kind of was irking to kind of put it out in the open. And it triggered a lot of debate. Haseeb obviously came out and is very eloquently written piece about the belief in the exponentials and the potential of technology. But so it was a good debate around that. Like, it's not so much discussing the potential, although Haseeb really loves to anchor it back to that. And I was like, is it priced in? Because, I think we're at that point in the industry where most people kind of would agree that there's just a ton of potential. You want to be on the right side of history and be involved in this space in some way, shape, or another. But it's like, is Ethereum worth 380 billion? And you remember that I kind of tweeted about this a couple of weeks ago. I said, what would you rather own? And I think I'm actually going to build an app around that. Like, would you own Ethereum at 380 billion, close to 500 billion at the peak, or SpaceX? Would you rather own Stripe at 100 billion or Solana at 85 or 100 billion? Would you rather own Tron and Sui at 30 billion or Ramp at 32 billion? And so I feel like these juxtapositions really force your brain around, am I actually holding an instrument that, like, it really exposes am I getting paid enough to take this level of risk? And so anyways, I thought it was a good debate. There was a guy from Igen who kind of used an AI model to predict who had won. Unclear what the black box does. But then I tweeted, there's only really one way to settle this debate, which is put your money on the line, which is why I think prediction markets do very well. I wanted to get a poly market up, but I think I'd ask two questions, and I want you to answer them if your compliance team is okay with it. The first one is, will ETH reach $1 trillion market cap this cycle? I was thinking about putting it range bound, like end of 2026, but like this cycle, will ETH reach 1 trillion market cap? Yes or no?
What do you mean by this cycle?
Correct. And it's ambiguous.
Yeah.
Again, I call it wherever you think we're in the cycle, but like, and by in the next 2
because
years,
I'm like I'm not like a cycle guy, right? Like I'm like a firm believer that, like, the business cycle matters, the macroeconomic cycle matters. I don't believe in this like 4-year Bitcoin cycle, and so especially not today. And so, okay, so ETH is 375, 400, right? Today, right?
So
do I
3x.
think ETH will go? Yeah, do I think ETH will go between 2.5 to 3x from here in some reasonable time period over the next couple of years? I do, absolutely.
Call it over the next, because like you all discount the MPV or whatever, but like by end of 2026, middle of 2027. Call in the next 2 to 3 years, does ETH hit $1 trillion? A trillion market cap.
By middle of 27, does it hit $1 trillion?
Like by 27, are you seeing ETH at $1 trillion market cap?
I think before the end of this administration in the US, ETH is over $1 trillion.
Fair enough. That's more than that. Is that what, 3 years left in this administration?
It's like 2. Yeah, it's going to be like
3 plus 3.
Yeah, 3 years. 3 years left.
Okay, let's use that within this administration. I like that. So you're saying yes, ETH will hit $1 trillion in this administration. Fair enough.
Okay,
Second
yes,
poll.
I believe so.
Okay, second poll. You're yes. By the way, right now,
not financial advice. Just
correct. Yeah. Correct. Right now, a third of participants agree with you. 52% disagree with you. So 52% of people say no, which is interesting. That, by the way, very different, right? Because the hate commentary on my bearishness, the overvaluation of these, has invited a lot of maximalists to come out and say that I'm terribly wrong and stupid and curving it, and I should leave the space promptly and go do something else with my life. Anyways, by the
way, you might have been like the single most active angel in crypto token projects for a long period of time. So it's not like you haven't given and put your money where your mouth is in this space for a long time. I'm
still here. I'm building. I'm dedicating my career and an irresponsible percentage of my net worth to this space. Now, and this is sort of the thing that I will actually love maybe your perspective on, which is you can simultaneously be very, very believing in the potential of something, an optimist, but being skeptical. That doesn't mean that you're a pessimist or a cynic. And I think that's something that a nuance that most people kind of don't appreciate. Like Rob, I mean, you're in the business of producing the best risk-adjusted returns for your investors and absolute returns. It's like loyalty to what? Like you mean like if something were to run up dramatically in your strategy, you reallocate, you take risk off the table. I mean, like you're a professional investor. And I think that's it is hard to kind of argue with the crypto crowd because they will immediately, they love the narrative painting that Haseeb's so good at. They hate anytime you suggest that perhaps, just maybe, Ethereum shouldn't be worth $380 billion. But I still haven't heard a very compelling argument as to why it should be worth $380 billion.
I will say something that I'm not sure if that's a crypto specific point as much as it is like a general like Twitter discourse issue, right? Like discourse online today is terrible. It's awful, right? You get a lot of, so under Nikita, there was actually there's a guy based 16Z who wrote a post today. He's an anon, but he's also I would consider him a friend in person, but he's also an anon online. And he wrote a article that was kind of like short degeneracy. It was basically being like, maybe we've topped in terms of like the amount of like gambling people want to do and the amount of just like the financial nihilism that exists. And maybe we'll get to a point where, you know, people are doing less of that. And we were going to have like a snapback, but also the point was just around how under Nikita Beer's kind of stewardship of the Twitter, just the Twitter algorithm, and just like generally how everything works in the world of AI, that there's now this essentially crowding that's happened where the thing that is most viral is way more viral than the thing that is third viral. Right. And there's like this crowding that's happened where being number one or being like the most, the largest topic, the thing that people care about the most that day is now the only thing that people see. Right. You see 90% of things. Right. And there's just a lot more dispersion in interest now and a lot more dispersion. And so the reason I say that is because of that, you now have to be just more insane to get people to react and to get people to see your stuff, right? So you have to be more controversial. You have to be even more insane. You have to be even, call it more out on, the left or right side of the curve. And what does that mean? That means that also people's reactions are more emotional. They're much stronger. And so it strikes me that now people are trained to like just really reflexively fight with everything. Because like that fighting gets them seen at a higher rate. It also means that, the things that they're engaging with are things that are meant to be more viral and meant to make them have an emotional reaction more. So I don't know. I thought that was interesting. That's a little bit of an aside, but I just think the state of discourse is awful.
Yeah. It's this idea of you feel that you're more connected doesn't mean you're more informed.
Right.
Because and that's a nuance and it's powerful. Second question. So you're saying, yes, Ethereum can hit $1 trillion in this administration. Second question, which I think is probably the cleanest way to settle the debate because it's a point around overvaluation or not. It's like, which outcome has a higher probability of happening this cycle in this administration? ETH hitting 100 billion market cap or ETH hitting $1 trillion market cap?
Oh, so ETH goes down, it goes down 75%.
75%.
Yeah.
Versus, I kind of was debating what bookmarks, but I felt to me like that is an appropriate kind of range.
Which one's more likely? I personally think that it's more likely that it hits $1 trillion. Then it goes down another, call it 70% from here.
I wanted to ask Haseeb what percentage of the book is on Ethereum, like ETH, the liquid part. And then I told him if I gave him $100 million, how he would invest it. He kind of dodged that question. I'm not going to subject you to the same scrutiny because I would assume compliance is going to say, However,
we're venture investors. We are venture investors. Like we're not buying ETH, we're not buying Bitcoin.
Someone was asking me this today, but you still have some liquid part in your funds, right? I mean, we have
a relatively small fund that has liquids in it that is that we don't take new capital into, and we've told people specifically we're not going to do we're not gonna buy like Bitcoin and ETH, right? Like it's meant for like alts. So
yeah. But anyways, so the market there, well, the poll there, I should say, is actually more contentious. It's 52% says there's a higher probability of Ethereum here hitting 100 billion. 47% say 1 trillion. So
yeah, but
interesting.
By the way, that's expected, right? Like the fear and greed index right now too is like 10, right? Like it's like max fear, right?
Correct. And I wanted to structure these. I learned this from Danny Kahneman. I worked at a health startup called Elysium Health Studying Aging, and he was an advisor, and this guy wrote Thinking Fast and Slow.
Yep.
Like just a true legend in the sphere of behavioral economics and incentive design.
Great book.
Great book. There's others on Richard Thaler and Dan Ariely, but I learned a lot about incentive design from Danny. And he says the question you ask influences the response that you get. So really focus. It's this sort of idea that Einstein has, which is focus on asking the right question, because that is what you spend I think he says something around spend 80 to 90% of your time figuring out what the right question is. And then the solution comes far easier. And so I think like that's why I like introducing these two questions, because it, to your point earlier about like how do you measure the real answer, it's like I feel like it's the marginal or the discrepancy between how people like just might have a very strong opinion but express it in different ways that is totally like divergent.
This episode is brought to you by Zashi Wallet, your gateway to buying, storing, and spending encrypted Bitcoin. Zcash is decentralized digital cash, encrypted to preserve agency and safety. With a fixed supply of 21 million and a proof of work consensus, Zcash is encrypted Bitcoin. With Zashi Wallet, you can swap Bitcoin or any other cryptocurrency into Zcash and stay shielded by default. Thanks to Zashi Wallet for making today's episode possible. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I think you're hitting an important point, which is like lack of liquidity in the market, right? And to your point around musical chairs, and that's an access issue. That's a interest in terms of issue. It's some of it's just a volatility issue, right? But it's also things like, we were going to maybe touch on this later, but you might have seen that Vanguard is now allowing their wealth managers to sell crypto ETFs, right? And they were like basically the last holdout, right? And so as we have more and more of this access, more and more of this understanding that financial markets are coming on chain, more and more just education, I do expect that there will be more, less volatility and more long-term holders and more buyers, right? And, we can talk about the ETFs a little bit because we had kind of, I think November was the only month that we've had, Bitcoin outflows on the Bitcoin ETFs. Yeah, in a while, right? Maybe for the entire year. For the
February, I think was pretty bad, but I think November peaked.
Yeah, November was like the worst. And these inflows and these outflows, I think a lot of them have more to do with that people are using the ETFs as part of like basis trades with the CME, right? But
and Rob, let me stop you there. What exactly is the basis trade? I think we need to oversimplify is what I've learned after the last couple of weeks of just explaining to people fundamental analysis.
Yeah, so people are going long the spot, meaning long Bitcoin, which I think they're using the ETF to do if they don't want to, if there's some sort of regulated entity or an entity that would rather deal in a share than deal in like holding, Bitcoin physical. And then they're shorting the future or shorting the CME futures to pick up a funding rate difference, meaning they're getting like they're delta neutral. So they're not exposed to the volatility, the price risk of Bitcoin, but they're picking up the funding. And so I think that the ETFs are being used as a way to execute that without having to actually buy physical Bitcoin.
They don't buy
because
the
for people
physical.
who hold the shares.
Not to get too complicated on options 101, but they're buying options around the ETF to hedge. How exactly?
They might just be long the ETF, right? So
they're long the ETF, and then they're
shorting the future, the CME futures.
Got it.
Yeah.
And for context, you talk about funding rate. There's an Ostium round. There's controversy around how to calculate the funding rate, how Hyperliquid does it, but every exchange kind of has similar, but there's nuances in like the funding rate. Walk us through like the funding rate. Like when do you see really high funding rates? When do you see negative funding rates? They could be positive, they could be negative. Like how does that work?
So the funding rate is a mechanism of how, when I am going to be long something on leverage, how much am I willing to pay to be long, right? And so there's this weird thing in crypto where every exchange basically decided that the like base funding rate should be 10.95% annualized, essentially. And so when the market is typical, the funding rate is typically I'm willing to pay basically 11% to borrow to go long Bitcoin, to go long, yeah.
And that that funding rate is a collective figure of the
all the shorts and longs.
All the shorts and long. That doesn't necessarily mean obviously if someone is 100x levered, they're going to pay higher versus someone that is 10 times levered.
No, not necessarily. That's not necessarily true.
Right.
No.
You're just it's the same funding rate no matter how much leverage you have. But of course, if you have more leverage, ladies and gentlemen, there's a higher risk that you're going to get liquidated.
Yeah, we're just going to get liquidated more quickly, and you're paying obviously like you're paying the same rate, but you're paying obviously much more notional.
Same rate for everyone.
Yeah, but and so what happens is like when the market is very greedy and people are really bullish and people are thinking the price is going to go up, they're willing to pay a lot more to borrow to get long, like get long. And so sometimes the funding rate blows out, right? And then when you're shorting, right, you're picking up that funding rate because when you're shorting, you're essentially lending, right? So people go short the CME future, and the funding rates are structurally lower on CME than they are in like on crypto venues. But like if I'm short the CME, I might pick up call it 8% of Bitcoin denominated interest while I'm delta neutral Bitcoin itself, right? Yeah. So I'm essentially picking up 8%, but I'm delta neutral the price, and like that's a pretty good trade, right?
It's 8%. Implicit in that is, I think, probably you could be doing a whole different other strategies. I'm sure you're committing capital to that. You probably say, probably the hedge fund that's doing this, and we talk about kind of who are the suspects here, but like the large hedge funds, sophisticated hedge funds probably say, hey, this thing Bitcoin probably has legs, probably structurally, like probably kind of long, probably kind of think I would accept it as a payment in kind. I'm going to take the gamble. It feels like a better way to express kind of where in a scenario where Bitcoin kind of goes higher, I'm going to get 8% in Bitcoin, and Bitcoin 10x from here, I made 80%. Is that usually how it goes?
Well, no, I mean, if you're 1-to-1 delta neutral and you're not like super highly levered, right? Then like you're not getting exposed to the price whatsoever. If you're not matched 1-to-1 and you're not actually delta neutral, then yeah, you could actually get more leverage. So.
Yeah, and what percentage of the shops are doing strictly delta neutral, and like how much of the market's like not delta neutral?
I think a lot of it's delta neutral, but I think a lot of people might be call it 2-to-1, especially like on CME though. Like people, I mean, like crypto degens, right? Like there's a lot more leverage in crypto degens than there is in like people playing CME. I think people playing CME are typically the hedge funds that like if they can clip 10% on what they see as a relatively low risk trade, like that's huge for them because if they're up 25% on the
yeah, the name of the game is the Sharpe ratio on that is pretty high because if it's truly delta neutral, then getting 10% risk free is 2x of what you get with that's a good trade as a hedge fund. How can that trade go wrong, and what does that mean for the rest of the market?
Well, I mean, there's counterparty risk, which is why you see a lot more. So people are willing to actually do this with an ETF and CME, even though it's typically lower funding rates. And the reason for that is primarily because of the fact that, like, one, they might just want to deal in a share instead of dealing in physical, right? Because that's easier. It's a better setup for how they already trade, right? Because they're already dealing shares all day, right? If they're trading equities. And two is they would rather take CME equity risk, counterparty risk versus call it maybe, Binance or Bybit or
Coinbase or Custodian or whatever. Yeah.
Kraken,
So you're implicitly kind of like indirectly exposed to that, but you don't want to kind of do it directly.
Yeah, exactly. But there also is, I mean, there are times where like the market really dislocates, and when the market, trades down a lot, like, if you're levered, you might have, call it, potentially like P&L you can't realize, or like what we had on 1010, which was people got auto delevered, but the short and long leg got kind of closed at different times, right? And so like that delta neutrality broke. And so there are in times of increased volatility, this kind of call it ability to be neutral, truly delta neutral, kind of breaks sometimes.
Yeah. Let's bring it back to current state of the markets. You're saying there's a lot of nervousness in the market. You're saying, hey, look, a lot of people are closing these trades. Why is that? Is it just because the funding rates have come down, and you're no longer getting paid 8%, or what's the sentiment out there with hedge funds?
Some of it, by the way, is just that it is December 4th, and like you know how this works in traditional markets. We're 3 weeks from Christmas today, right?
Yeah.
I got a holiday party last night. I have one tonight. I've got 3 next week, right?
Wow.
People,
am I going to get invited to any of those, or are you? Yeah.
Well, I'm waiting for the inversion holiday party, right? So my workers are inviting me. Where's the inversion holiday party?
Rob, I might send you a little vest, but otherwise, we're
right,
going to heads down and
wear it on the pod.
All right, there we go. We'll keep you warm.
No, but in traditional markets, where people are not used to trading 24/7 and don't think that like they need to make all of their gains like at certain periods of time. Like you see this in crypto all the time. People are like, oh, like there's parts of times in the market where like you're going to make huge gains, so you have to be on at your computer all the time. In traditional markets, like people, if they're up 20% this year, 25% this year, like they're closing their positions. They're moving into the end of the year. They're clipping their carry. Like they're going and like relaxing, right? And so the people that are more likely to be in an ETF are like a lot of those people, right? Not like the crypto natives. And so there's a lot of that happening, but there's a lot of macroeconomic fear. I mean, we should go into MicroStrategy a little bit because if you look at what the bond pricing is right now, like the bond investors are quite scared about what's happening.
What's the bond price on MSCR? What is it maturing? 28, 27?
Yeah, so there's a few of them. I think if you look at on the I'll pull it up right now. But if you look at the perpetuals, the one that's like the most junior was trading at like $78 this week, right? And so they're pricing in a significant risk in that this is going to be it's essentially junk, right? Like that you're not going to be able to get your money back. The STRD Series Stride, which it's about 12.5% effective yield. It's like junior to all of the others. It's trading at about $78, $79.
Put that in perspective. I mean that I've seen bonds trade all the way down to 12 cents, 10 cents.
Totally.
You probably see. It's interesting. What do you read into that? Because like, okay, Saylor might go out and say, "Wait a minute, folks. There's I think the CFO that went on and I got pinged immediately by a couple of reporters. Got quoted on Bloomberg about this, but it was like, wait a minute. I thought that the whole thing was that their capital structure is so sound and bulletproof that they're never going to have to sell Bitcoin. The interest is so low. I think it's like less than 1% on the notional that you actually just with the cash flow of the business, like you don't have to sell. You can cover interest payments. You're saying by the bondholders and why it's trading at that level of 70 cents is it's bullet at maturity. So you're not not solvent enough to pay this and you're going to get wiped. Is that kind of what's going into that or why is it trading at 70 cents?
Yeah. So maybe we'll back up a little bit, but so at $78, right, for Stride, which is one of their preferred stocks, but it's the most junior of the preferred, right? Like if you do the bond math a little bit, it basically implies that the market thinks there's something like a 9 or 10% chance of default on that, right? So that's still more senior than common equity, but it's, call it more junior than the other prefs and any debt that they would put on. So like they think like somewhere in the middle of the equity stack, or call it closer to the common equity, there's a 10% chance that they're not getting paid back, right? That's pretty high, right? But it's not obviously a death nail, to your point.
This episode is brought to you by Zashi Wallet, your gateway to buying, storing, and spending encrypted Bitcoin. Zcash is decentralized digital cash, encrypted to preserve agency and safety. With a fixed supply of 21 million and a proof of work consensus, Zcash is encrypted Bitcoin. With Zashi Wallet, you can swap Bitcoin or any other cryptocurrency into Zcash and stay shielded by default. Thanks to Zashi Wallet for making today's episode possible. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
If you take a step back and like you think about what's happening at MicroStrategy, well, what is MicroStrategy? It is, there was this, or now Strategy, sorry. It was this, called software company, but it was a software company that does a couple $100 million of revenue. And then it's approximately $50 billion $55 billion of Bitcoin. Essentially,
Bitcoin.
Right?
It's like 3% of the total supply, like 625,000 Bitcoin or something like that.
Yeah, something like that. Yeah. And so you have $55-ish billion of Bitcoin, and it's at times traded at 2 times NAV or 2.5 times NAV, and that's when they've gone and like raised a bunch of capital, because the story has always been Strategy is going to outperform Bitcoin because they're going to be able to increase your Bitcoin per share because they're going to sell equity at when it's trading at a premium to NAV, and then they're going to go buy more Bitcoin, right? So now it's trading back down. It's not below 1, but it's been trading between like 1 and like 1.15 of NAV. And the CEO came out and said, well, hey, listen, like maybe we would have to sell Bitcoin or we would sell Bitcoin to buy back shares, which mathematically makes sense for the shareholders if it trades below NAV, right? And that spooked the market. I think one day the Strategy was down like 30%. The preferreds were trading, kind of more of them were trading in junk territory, and people were scared, right? Because with the price of Bitcoin, and also Bitcoin went from 125K to 80K in basically a couple weeks, right? And so now Bitcoin's back up to 92K, and Strategy came out and they actually raised a cash buffer. And they came out and said, okay, now we have actually enough cash that we will not use to buy Bitcoin that can pay about 2 years of dividends for these debt-like instruments that we have. And so the market really liked that. I think it traded back up 30% right after that happened. And it was essentially like, listen, like this idea that we're going to get to, people are scared of this thing called a death spiral, where it's like, okay, well, it trades below NAV, so I sell Bitcoin to buy back my shares. But because I'm selling Bitcoin and I own 3 to 4% of it, now Bitcoin is trading down. So like I keep trading below NAV, so I keep selling more Bitcoin, and now this kind of spiral happens. I think Sandeep from Polygon came out and said, "Oh, like I hope this isn't Luna," as if this reflexivity between the US dollar stablecoin that Luna had and was the same thing. And it's clearly not. I think that's just like a pretty big misunderstanding about how like these like public market instruments work. But the market was spooked, like no doubt about it. So anyways, they put out the cash reserve, and now it seems fine. It's steadied. And also like, Bitcoin has steadied. So I think this kind of like short-term scare will probably go away for a little bit, but if Bitcoin trades down another 15% from here in kind of rapid succession, we'll continue to hear more people talk about this. So
yeah, for sure. And just to put a little bit of more color into this, I think it's the USD reserve is to the tune of 1.4, 1.5 billion. They sold some Class A shares at the market, and I think one of the things that I would ask a lot is when you have someone so fanatical and so adamant about Bitcoin being the purest, most pristine asset in the world, and everything else you got to sell and cash is trash, Aladalio, and then it sort of concedes to the whims of the market. It's sort of an ever so slightly just change in tune kind of spooks a lot of participants. Do you think that there's merit to that argument, in the sense that, like, if you're an RIA, if you're, Saylor is kind of the chief marketing officer of, like, CMO of Bitcoin, and you're now seeing that and you're saying, well, do you think it gives pause to people that would say, hey, this is interesting. Like, maybe we shouldn't be all hot and heavy on Bitcoin, and maybe it just warrants a bit more caution or thinking about it, and or is it just totally irrelevant? Is this more of a perception thing? I know it's very hard to measure, but Saylor is, like, for better or for worse. I think some hardline Bitcoiners have said, we don't like MicroStrategy because it's counter to this whole ethos of Satoshi being anonymous, and you have now someone that is kind of, for better or for worse, hijacked the supply and hijacked the narrative. And is that good or bad? Does that even compute? Does it influence decisions at the board level or RIAs, institutions?
I don't think so. Listen, the ideological phase of crypto is over. Full stop. Right?
Like, say it again, Rob, because your co-founder might heavily disagree.
No, the ideological phase of crypto is over. The phase of crypto we are in is in the institutionalization phase, right? We are in the mass adoption phase, right? And that means that you cannot be ideological to make money. You cannot be ideological when you think about your investment decisions. And is Saylor ideological in some sense? But I bet you less than people actually think, right? So at the end of the day, Saylor, of course, and I'm not going to go back through every statement he ever made, but if you go listen to the actual earnings calls with the people that work for him, the story was never strategy will buy Bitcoin and it is a black hole and it will never sell Bitcoin. The story is that strategy will outperform Bitcoin because they will increase your Bitcoin per share, right?
Yep,
and so if you viewed it from that lens, which a sophisticated investor probably would have, then you understand good entry points, you understand what's happening in the market, and you're trading it appropriately, right? Yeah. The people who are ideological, but like, oh, Saylor is the chief marketing officer of Bitcoin, and like he's going to be the one to, he's just going to continue to gobble it up. Like, that is ideological, and I think was incorrect read of the situation. So
I think he's been fairly cognizant, like very explicit about playing the capital markets, right? And his strategy is just playing that. I want to get one of the things that I've thought about, like the Luna comparison is blown out. There is a kind of a silver lining there that is worth kind of like introducing, because if you remember the collapse of Luna, it's sort of could have Luna worked? And there's a version of this world where I think it could have worked. If you remember, look, not to get into the mechanics, but like you're a algorithmic stablecoin. In some sense, it's trying to do this mechanism that Saylor is doing with M now. It's not a perfect comparison. I'm not ever suggesting that. However, I do think that there is the reserve is what I'm trying to zero in on, because Terra in the latest kind of stages was saying, hey, you try to diversify the collateral backing the stablecoin. In this case, if for some history of crypto, algorithmic stablecoin Terra had a stablecoin, like there was a Luna ecosystem, and everything that was backing that stablecoin was the token Luna, right? And they always kind of said, hey, look, there's going to be more demand, more. They have this chai e-commerce thing, and merchants are going to adopt this stablecoin. It's going to be, the payments rail, the internet. Everyone in Korea is using it. Here's all our growth, and it was hard to always audit, which is why I never invested. I never got clear answers from Doe. personally when I met him because he was raising the seed, and then I was a Verify, but then over time he sort of conceded. He said, "Oh, maybe it wouldn't be such a bad idea to diversify the collateral pool and go from pure kind of like a pure like fictitious thing, a social construct that gives value to the token, because they were paying all this yield." And then they said, let's expand the collateral. And so they bought Bitcoin. And that's where I think the market was like, oh shit, turtles all the way down. Which in some sense, like Bitcoin is turtles all the way down too. It's like a pure social, the God tier meme, and it's a digital cult.
Yeah, but I think I mean, listen, I understand how at surface level, like Sandeep said what he said, right? And Sandeep's obviously he's a very smart person, and like, he's created Polygon, and he's done a bunch of other stuff and done very well for himself, obviously. But like the price of Luna was essentially linked to to UST adoption, right? And so when people wanted to sell Luna, like, or they wanted to sell the UST for Luna, and then they need the arbitrageur to be there, right? Those things were interlinked. And so there was like a reflexive thing that was happening between the two of them. The price of Bitcoin, while there is a person who owns 3% of Bitcoin and like, theoretically, I guess, could decide to sell it to, go and buy back the shares. One, they're not actually a forced seller. They don't have to do that, right? Because there isn't like, you don't need to run for the door. They can just decide to hold it, and they can try to trade below NAV. Two, the price of Bitcoin, while,
and by the way, it's a harder collateral. Like you're holding something that, is separate from what is tied to your, they have other.
Yeah, exactly. Right. Like while the equity price is dependent on Bitcoin in some sense, it's not fully dependent on it, but the Bitcoin price is not dependent on the equity. Right.
Correct.
Whereas in the USD price and the Luna price were directly dependent on each other.
What you just said there is the most important distinction between Luna, Terra, and Bitcoin and MicroStrategy. You want to say that again so that people can internalize that, because the FUD will continue if price goes down. Say that again, because we want to clip it and we want to sear it in the brains of people that are making the same comparison.
In Luna, the price of Luna and the price of UST were directly related to each other. And they affected each other one-to-one. In MicroStrategy or strategy, the price of the equity is dependent on Bitcoin, but the price of Bitcoin is not dependent on the equity. And that is the difference.
Correct. Now, if MicroStrategy were the sole buyer or a very disproportionate buyer of Bitcoin, but that's not the case.
Yeah, and listen, if they were in a liquidation event where they had to be a forced seller and they had to get rid of all of it, if you dumped 3.5% of Bitcoin onto the market right away, would we have massive, a decrease in price? Sure, absolutely. But it's an extremely liquid asset. And you know what? A lot of people would buy it, but it's still only 3.5% regardless, right?
Yeah. Yeah.
So
I mean, this reminds me a lot of the Mt.
The Mt. Gox stuff. Yeah. But I think one point I want to make too is I think to your point around Luna, they started thinking about putting more collateral for USD. I think they bought, if I remember right, 6 billion of Bitcoin, right?
Yeah.
And it was like 6 billion of Bitcoin on an $80 billion asset. So it was still vastly Luna, right?
Yeah. I like to play this, like, what would have happened if Doe would have come to this realization early on, but he was just like very maniacal in some sense, or in a lot of sense. What would have happened if he would have come to that realization way early on and expanded that reserve of Bitcoin to, it's like the banks have a Basel capital requirement ratio, to kind of have a buffer. We should maybe talk about the Tether FUD too, which I'd love to get your perspective on. But just around this conversation around Luna, was there an appropriate, a lot of the conversation as it went down, was there an appropriate level of Bitcoin reserves as a percentage of the total that would have given stability to the protocol and would have avoided this collapse, combined with a lack of liquidity? Because the door on the way out was the amount of USDT in circulation, like the door never came out, like the door never expanded to absorb all of the wind. And so the price really dislocated and just went into a spiral. But do you think there was had that number not been 8%, had that number been 20%, 30%, 40%? Like, what was there a number where this would have fundamentally have changed the outcome?
Well, yeah, I mean, absolutely. Like if there was, because Luna was dependent on UST and UST was dependent on Luna, essentially, right? If there was some sort of collateral that was the majority of, call it like if I think of Luna as equity, right? And I think about like, whatever, a bank, and a bank needs some sort of like, tier one equity. Like Luna, obviously they saw like, if Luna was like the equity, it shouldn't have been more than, call it 10 to 15% of what was backing UST, right? And so if that's the case, there would have been, call it whatever, treasuries, there would have been Bitcoin, there would have been anything else. But then the price of Luna would have collapsed, because the usability and the reason for Luna to exist and the arbitrageurs to be there wouldn't have made sense either, right? And so like the incentives were all wrong, because the incentives were for the people who were running the protocol to continue to push Luna, because that's where all their wealth was, right?
Yeah.
And that was the issue. It was like, it was an incentive misalignment.
Totally. Just on this point alone, not Basel capital requirements are so important. People learned that the hard way in the global financial crisis. But importantly, if you're a financial institution, just like a JP Morgan, you cannot use your shares to meet those solvency requirements, which is an important point, which is in this case of Luna Terra, like they were using their own equity for the market to believe that this was sort of like going to continue, and you had to believe a whole lot of stacked assumptions, and at some point the Jenga tower just kind of collapsed. So anyways, I feel like in crypto sometimes we speed run a lot of the mistakes that TradFi has done over the years, and like it's like it pays maybe to kind of go look at some of the things that have not worked in traditional finance and avoid them outright.
This episode of Empire is brought to you by VanEck's on-chain economy ETF, Node. If you feel like you are constantly missing alpha, never have time to scroll through crypto Twitter, Node is for you. Node is actively managed by an experienced team with years in both TradFi and crypto. That team at Node looks to capture the most powerful trends across all of crypto while actively managing volatility as markets evolve. Super important in today's environment. Check out Node's track record so far at vaneck.com/empire/node. That's vaneck.com/empire/node. You can also, a little easier, just click the link in the show notes. Thanks to VanEck and VanEck's on-chain economy ETF, Node, for making today's episode of Empire possible. This episode is brought to you by Geodnet, the world's largest decentralized RTK network, delivering real-time, centimeter-accurate positioning around the globe. Powering technologies that enable precise navigation for drones, autonomous vehicles, first responders, farmers, and robotics, Geodnet shows that blockchain can be a truly transformative force. By delivering real-time centimeter-level accuracy, Geodnet enhances emergency response, boosts construction precision, and enables advanced navigation for drones and surveyors far beyond the limits of standard GPS. To find out more, click the link in the show notes or follow them on X. The Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed $3.3 trillion in all-time volume, handled over 465 million swaps from more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps, access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Thanks to Uniswap for making today's episode possible. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Should we talk about the Tether FUD? Do you want to?
So listen, I mean,
you're Mr. Stablecoin. I have to ask the question: is Tether going to be solvent for the 100 million time? Is Tether going to be okay?
Yes, Tether's fine. They're okay. Whatever. I mean, they're there's rumors out there that they're raising $15 billion right now, at a $500 billion valuation, right? For some of the smartest people in the world. Yeah. Listen, I think
give us like the TLDR of like why did this rumor come about? And it was Arthur Hayes kind of tweeted something, and then everyone kind of picked it up.
Yeah, I mean, listen, Arthur's doing a lot of tweeting these days for a
I mean,
lot of things.
Arthur also said that the discount rate for hyperliquid and some of these crypto assets is like 5%, which is a risk-free rate. So
yeah. So
his fundamental analysis is not sound.
I think if you had a really real conversation with Arthur, he would tell you, to our conversation earlier about attention being the right currency, that he is not tweeting what he actually believes, because he's a very smart guy. He's tweeting what he thinks gets him attention, right? And bringing up the Tether FUD is what got him attention, right? You might remember this, but in 2021, there was a lot of very sophisticated hedge funds that were paying like 8% to short USDT. But with the idea that we think USD Tether is going to collapse. As I think at one point I heard of one fund, like the borrow ended up getting like up to like 20%, right, to short USDT, which is like crazy. People were like lighting money on fire because they really believed that Tether was going under.
Mm-hmm.
But
right.
No, I mean, the concern has been that if you look at the attestation of Tether, that, or USDT, it is not a one-to-one treasury-backed stablecoin in the same way that Circle is or some others are. They have a significant amount of gold. They have a significant amount of there's some Bitcoin. They have these like private investments. They have supposedly, according to Paolo, like $30 billion of excess equity, though, right? Which is like a pretty big buffer. And so you look at it, and maybe you have to make some sort of I guess I would say like qualitative calls on how some of their collateral would be thought about in Basel, but they probably have like 10 to 12%, tier one capital, right? Yeah. Which is like lower than bank ratios are usually required. Like it's usually like 17, 18%, but 17, 18% is pretty high. And that's a post, global financial crisis number. So like, it doesn't look particularly that less risky than, call it, anything that exists in like the traditional banking world. And, if they managed their gold and they managed their portfolio, like, yeah, then maybe they would go and sell Bitcoin. Maybe they would go and sell gold, right? But like, it all seems pretty fine to me, right? It seems like appropriately risk managed. And they're also at like such a size today that we're talking about like big numbers, and there would have to be like a huge run on USDT. And one of the things that they've done a pretty good job of is that it is actually really just impossible to redeem USDT today. There's like very few people who can do it. And so like they would have
feature,
a lot of time.
Yeah. Feature, not a bug, eh?
Yeah, it is definitely a feature, not a bug for them.
So I'm pulling up solvency ratios here just for the sake of the crew to keep this number in the back of their mind. And then we should transition to maybe other stuff, Polymarket and something else. But
prediction markets, weekly prediction market update.
Prediction market update. Yeah. So solvency ratios. Yeah. The set one ratio is the most important one. The highest quality capital, common equity, retained earnings, the money that's truly available to absorb losses. That is 12% ish. Seems like minimum is 8 before buffers. So it's typically,
and I mean, that makes sense, right? Like it's not crazy here. And like they I mean, Palace said they have like $30 billion of excess equity. And I mean, what is Tether outstanding today? Like is it 180? Am I totally off?
Yeah.
185.
Anywho,
so like,
probability. You talked about the probability of MicroStrategy. What the bondholders at least are telling us is somewhere to the tune of 10% of going back, being in default. What would you peg the probability of USDT being insolvent? Or depegging, because I remember, I'm old enough to remember that there were multiple depegging events.
I think like, it also depends on like what level of depeg, but like, I mean, a depeg is essentially, by the way, just the market pricing in a potential insolvency, right? Like it's kind of the same thing we talked about with the bond, or the preferreds over at Strategy. But like what the market right now is pricing that likelihood of like near zero. And like my guess is like, that it's pretty, it's not zero obviously, but is it 1%? Like, I'd be shocked if anyone thought it was more than 1 or 2% that was sophisticated today.
Yeah. And like it's an important nuance. I was in conversations with this like super large conglomerate based out of the Middle East, and they asked me this question. We were talking about stablecoins, and I think they said, "Hey, what are the risks?" And I immediately said, like, there's always a risk, of course. Like anytime someone says there's no risk, run away. They're either naive or deceitful or both, or and it's just there's always risks. We were sitting there at a really large financial institution, and the event was hosted by them, and I said, look, you keep your family office here. There is risk of JP Morgan like doing bad loans and potentially being insolvent. And the same with it, no one believed that Lehman would ever go down because it was the premier institution. And so I said the difference here is you have a transparent system that you can audit some of this stuff, that you can have proof of reserves. And I think we've come a long way as an industry, but more of that is useful. It's a more transparent system.
And I would say, like, for Tether, if you believe it is likely to be insolvent, or you're pricing that in, you're probably the smarter, or like the way to get there that like makes more sense is you just think their attestations are
false.
Like are false, right? And you think okay, well, they don't have real audits, they only have attestations because they aren't able to actually produce like the information required for an audit, and so we think it's false. But if you look at the attestation and you say, listen, I think these guys are going under, that doesn't really like it. That strikes me as like mathematically, I won't say, I would say not something that I think most
improbable.
Yes.
Simple question, and I think Paolo has gotten this question time and time again. Like, why not produce an audit? Why just an attestation? Why not settle this argument once and for all? And you could say, well, an audit doesn't solve anything, because then someone say, look, Enron was audited, and First Brands was audited.
No, fraud, right? Like, it was very sophisticated fraud. Enron was, right?
Correct.
Like, and it doesn't mean you can't commit very sophisticated fraud in any sort of financial institution. It's harder, I think, when like the assets are simply like gold and Bitcoin and U.S. Treasuries. Yeah, right.
And maybe Juventus soccer team or something.
Yeah. Well, luxury assets.
That might be the saving grace, given where sport franchises are trading, and Juventus is not a bad team.
Yeah. Well, listen, the luxury assets.
You and
the rich are getting richer.
You and I are in the wrong business, or we should just buy a soccer team or Formula One interest in a team and just tokenize it or something.
Can I get an inversion sponsored? Premier League team? Can we do that? When's that gonna happen?
The valuations are a bit too rich right now. I don't want to get into that, but I've certainly, I content of the week, I'm fast forwarding. There's a book, Moneyball equivalent, for the guy that ran the scouting program for, I think it was Liverpool. And it's just fascinating stuff, just the Premier League earnings and whatnot. A great book. I'll post it in the show notes. Anyway. TBD, Rob, I'm working hard here. Hopefully we get to a point where we can buy these teams.
Should we do prediction markets again?
Yeah, let's do it. You're the king here. So give us a rundown.
What's the news this week? So Kalshi's, I think this has been rumored already, but Kalshi raised $1 billion, led by Paradigm, I believe, at $11 billion valuation. That follows their $300 million raise that they did at $5 billion a couple of months ago. Obviously, there's been this kind of back-to-back fundraisers for them in Polymarket, somewhat competing. Polymarket obviously raised $2 billion, or it was a little less than that in primaries. There was some secondary in there at a $9 billion valuation. And they've been rumored to raise more money at a higher valuation as well. So, the excitement around prediction markets continues. I think somewhat interestingly, right after that deal was announced, Robinhood, who is about 60% of Kalshi's volumes, came out and said that they were acquiring the old LedgerX business to vertically, and they were doing a JV with Susquehanna to vertically integrate a prediction market exchange, which through Robinhood Markets, that implies that they will replace Kalshi as their liquidity provider underneath the hood, and so that's 60% of Kalshi's volume. So I'm interested in what the investors in this round knew, or what they were able to figure out during diligence before that round got done.
So on that point,
say
that you're the founder of Kalshi, the two founders. That's coming. Do you or do you not have a fiduciary responsibility to reveal that, even if you don't get asked that question, like a material change in contract?
I think legally they wouldn't have like a duty to say
obligation.
that.
Okay.
No obligation
Even though you're
to offer it legally, right? If they got asked it, they should have answered appropriately. And if they committed fraud and they misrepresented what was happening, then like that's different, right? But if they didn't get asked, then I don't think legally they have any obligation.
Paint me the hypothetical of the misrepresentation.
Well, I mean,
your paradigm, you send a
it,
diligence request. We've all sent them. Sorry.
Yeah, I mean, listen, I think on like you sent a diligence request, and by the way, we saw this with like FTX, right? Where people would send a diligence request, and they sent back financials that clearly were missing part of their balance sheet, right? Essentially, it was misrepresenting what the balance sheet looked like, right?
Right.
That very clearly, in this case, if you send across a diligence request or a question list, and you said, "Hey, listen, what is the nature of your contract with Robinhood, and what do you expect that to look like over time?" And they knew that they might be losing the Robinhood volume, they would have to answer like appropriately that like they had this understanding, right? So I don't know what happened here. I don't want to like imply that there was anything untoward.
But let's just say your paradigm right now, and you're saying, "Holy shit, a lot of the volume might poof disappear." You go back to your diligence request and you say, "Hey, we asked them this question. Hey, God is Frank," or "Hey, Charlie," whoever led the round. "Hey, Matt, what the hell happened here?" I said, "Hey, we actually asked them about this contract, and they said that they had been working with Robinhood for a while, and that they had no reason to believe that they were never. Can I answer that? Is what I'm trying to say, right? They were never like legally like, oh, we have no reason to believe that as you see in the risk disclosure sections of a 10K. In venture rounds, you typically don't, like, it's not as thorough. Whereas in a 10K, you probably would kind of spell out, we have material concentration with one party called Robinhood. If that ever were to go away, we feel that we are in a well position, but it's a very competitive market. There's a kind of duopoly happening, and there's, there might be an adverse event because there's material concentration of customer here, or a provider and liquidity provider, volume source, and there's a high concentration. Just but it is. So, the only reason why I'm branching is it's a good lesson to not just in crypto, but as an investor, it pays to really do your diligence. And I found myself sometimes, you want to win the deal, you want to be in good with the founders, and it's a competitive round. And I tell my team this all the time: you got to slow down to go fast. Like, you have to just always, when we interview candidates, never ever compromise on these three things. You can mess up all this stuff, but if we don't do references and we don't do that like in-person meeting, we can't hire a person. It's just fundamentally not going to happen. And I think as an investor, it just pays you to really, really, really just not compromise on the unnegotiables, right? And it's hard because if you're doing a hot deal and prediction markets are all the rage these days, you lower your standards. And I'm not suggesting that happened here, but it's something that perhaps you could have maybe asked that question harder and harder and harder and harder, and drill down until you get a very satisfactory answer. I'm not suggesting this happened here, but it's just sort of a hypothetical. Yeah, I remember you guys grilled me. There was nothing other than an idea and a pitch deck in my case, but you guys did very thorough, as thorough as it could get for like just an idea and a pitch deck. You know what I mean?
Yeah, no, and you're right. I mean, the one thing that, and again, I don't know what was said, who knew what. Maybe this was, they're also like, it's actually very unclear right now what exactly Robinhood's plans are, and if like maybe they will continue to use some liquidity providers under the hood, and maybe they'll continue to route some flow to Kalshi, et cetera, as this takes time to roll out. So like, it's all very unclear exactly how this is going to play out, and maybe this was known and still underwritten, right? And that's fine. But I would say the one thing that we think about. Say that again.
No, that's a fair point. Maybe Paradigm knew that, and they were like, "Hey, we're going to fill this out with someone else."
Yeah, and they were like, "We see the pipeline, and like it doesn't matter, right?
Yeah,
and like we think this is going to continue to be, on a rocket ship, which both Kalshi and Polymarket have been, and so that's totally possible as well, right? And so it's always interesting. But the one thing I will say is like we talk about this all the time as we do, some later stage deals. And when you see VC funds doing later stage deals, that is a bit of a style drift. And so you have to make sure that you have the capability and the understanding and the process to still underwrite in the same way that like a private equity firm does, or call it a more public equity type firm does. And so, but when you get these kind of really fast moving, really fast growing businesses, like the prediction market companies have been, like some of the stablecoin companies have been, and you get people that are going into maybe later and higher value companies than they're in typically, you do sometimes see, call it things that are missed. And so you have to really be thoughtful of that. And I've seen that less this cycle than we saw in 21 as everyone got really excited, but it is top of mind for us as we think about doing, some of these later stage deals.
So two follow-ups to this, and now we got to probably close out soon. One, did Robinhood ever have an equity? Do they have an equity position in Kalshi?
I do not believe they do, but I don't know for sure.
So. But probably would have been smart. Probably would have been smart for them to kind of produce a bigger lock-in by having them in the cap table now.
100%. Yeah, it's always good.
If I'm dead, I'm like I think Polymarket was smart taking ICE and a couple other very strategic investors, like very personable, like well-known figures to dominate on they have phenomenal video on the app. But we're you and I are both biased. People know this, like full disclosure. We were investors in Polymarket. So, however, I want to maybe on that, removing ourselves just from Kalshi, but I guess now people are calling me Mr. Price to Sales or Price to Earnings. Do you think that these rounds are being valued on that basis? And furthermore, like, what is the moat of a prediction market? Because if this was true, like if liquidity can be drying up and someone else is going to just launch their own and try to circumvent you, then it's particularly someone like Robinhood that has a lot of users, a lot of distribution. Like, what is the actual moat here? Like, are these businesses worth 15 billion or 10 billion, or are they just going to be competed away by someone that has way more distribution like Robinhood that says, hey, this is something users want to punt. I'm going to get here and I can copy the tech. I can deploy engineers. I'm not going to buy this thing for 10 billion. I can actually do this for $1 billion and sufficiently early on because there's not that much volume, but we can do this better.
I mean, I do think we're in a world where distribution matters more than anything than ever before. And like owning the customer matters more than before because like building the infrastructure is easier, right? So it's especially for Robinhood that already has the right licenses. And also there's all these DCOs that can be that are up for sale for relatively cheap. So I do really strongly believe that you should be giving more value to the people who own the end customer. And again, like I'm biased because Polymarket, way outperforms Kalshi in terms of brand and in terms of, search engine and their app has directly outperformed them, and like having people, those users directly interact through the front end, like that's significantly outperformed Kalshi, where Kalshi has been more of this infrastructure provider on the regulated side. And so I think that you have to own the end customer in these markets where it is hard to have a moat if you don't. And you should be providing more value to that, right? And I think that's starting to play out. We're starting to see the risk of that, clearly here in this Robinhood deal. And, you've seen, I think Fanatics, launched like it was like maybe a beta version of their app like a couple of days ago, and they're using crypto.com underneath the hood. Like how much value does crypto.com get out of that? Polymarket just launched their app earlier this week in the US. They're going direct to consumer, right? And the app was number one in sports on the iOS app store, like within a day, right?
Yeah.
And so
I was you want to hear something funny? I was down in my parents for Thanksgiving, and I met with the president, and as traditional as it gets, of this one of the largest industrial companies in the world. And we're talking because he wants to talk about crypto and how we could help them in that and all that. And I see his phone, and he says, "Oh yeah," not his phone. He pulls up and he's like, "Yeah, Polymarket." And him and his son had it and they were talking about it. And it was kind of a surreal moment. You're like, oh, like, wow, like this is, to your point, like crypto is now in a very different place. It was something about that moment was like, holy shit. And people love to talk about it in dinners. Like I've had so many dinners, people like pontificating about everyone's a political pundit and now it's such a great conversation. It's like, no, like the market like is just changed, and you anchor the conversation around the change in the probability. So it's kind of really neat, impacting, like permeating into like the day-to-day. Anyways, that's my rant.
All right. I mean, listen, like it's become very clear that Polymarket is, as a brand, it's just like, it's in many ways, it's become like kind of the Uber of prediction markets. Now, Kash has done a good job about fighting it back against that, but you talk to people internationally, especially, and people just they don't refer to prediction markets, they refer to Polymarket, especially Kash doesn't operate internationally.
What's a Polymarket? But anyways, to round out this discussion, congratulations to the Kalshi team for raising the round. One of the co-founders, Lua, is, I believe, the youngest self-made female billionaire or something to that effect.
I saw that, and I wondered if who is it? Lucy Gao.
I think apparently she beat that, and then obviously like one of the Kardashians or Kylie Jenner or some of these people. I forget. Yeah. There's someone else, but no. Anyways, nonetheless, huge feat. Congrats. Impressive.
I mean, congrats to her. I mean, Shane is also like 26, Shane's 27, I believe. Like, prediction markets are printing billionaires right now. So great for them.
Yeah.
So,
totally. Any, obviously, speaking of young folks, the Forbes 30 under 30 list came out. One of your founders, Nick VanEck from Agora, was there. Nick, we hope you all the best. Congrats. But really cool stuff. I think I saw something else on Agora that was pretty cool. I think they hired some from Coinbase, I believe. Some pretty good hires. They've been cooking up.
Yeah, they hired one of the most senior engineers at Coinbase to become their new head of engineering. So excited for them. Excited for Nick to make it. Hopefully he doesn't follow in some of the footsteps of some of the previous Forbes 30 under 30. And then obviously, I mean,
what are we going to get, Rob? Are we like... What are we going to get? Forbes, what is it? 40 under 40? Not to reveal your age, man. You look pretty young.
Yeah, can I get that? Forbes 40 under 40? Whatever.
I'll nominate
but obviously, and also, talking about this and talking about prediction markets, Shane was on the cover of Forbes 30 under 30. So,
and then someone had someone had the as the internet does, he had the Sam from FTX and Shane. But anyway.
Yeah.
Anyways, there's a couple of news here. We've been running for over an hour here. Anything else newsworthy that you want to call out? Maybe the Kraken acquisition by xStocks. That was pretty cool. I mean, tokenized stocks. I don't think we need to go into it. They didn't disclose terms, but that was interesting, I guess.
I guess. I mean, like listen, like I've said this, and I'll probably get a little hate for this, but like I didn't really think the product worked, and they kept announcing some sort of like high levels of volume, but if you looked on chain, like the on chain volume was like $2.5 million a day for xStocks. Like people weren't really using it on chain. And then most of other than Kraken, there was basically no volume in any of the like reputable exchanges for it. But Kraken was saying they were doing a bunch of volume in it. So if that's true, acquisition makes complete sense. Yeah. Like they'll be able to offer, now tokenized equities globally.
They were in a better focused. Yeah, but they were in a better position than anyone to understand that. Their press release claims xStocks has seen an exceptional adoption since its debut earlier in 2025, surpassing 10 billion in combined exchange and on-chain trading volume within 6 months. 10 billion in 6 months. Not bad. Investors can trade 24 hours a day, 5 days a week.
Yeah, I mean, the only reputable exchange that's been reporting volume of xStocks has been Kraken. So they were in a better position than anybody, obviously. And then...
What do you think the price for that was? Was that a big outcome for them, or?
I'd be shocked if it wasn't, call it, sub $100 million, but.
Right.
But listen, Kraken's been all about the
IPO,
idea of the everything app, right? Which like Coinbase has been and others have been. And this helps them continue to offer like new products globally and also for ink, I'm sure. And so I'm sure that's a big part of this.
Yeah. Obviously, Kraken operates internationally. Interesting to see. I think this will be one where we might look back and say, did we overly engineer a product that was not there in the demand? I think you've had questions around, is the demand going to be there? And maybe the demand is a function of like solving the product and the liquidity and the market structure, which is still, maybe non-existent. But I think there's something true to the fact that like people outside the US have a lot of people have a hard time having exposure to your Teslas, your Apple, your, NVIDIAs. This could be a good, and the same with stablecoins have filled a lot of the demand for dollars. xStocks and tokenized stocks could fill a lot of demand, ex-US and sophisticated developed markets for stocks. So we'll see. Early days there, I guess.
All right, should we do content?
Yes, sir. I kind of gave one, so you forced me to be first last time. Now you got to go first. What's a horror movie of choice this time?
No, so we're in Christmas time. Okay, so I'm gonna give two things. All right, the Jonas Brothers Christmas movie. Okay, it was fun. That
was not in my bingo card, but okay, tell us more about that.
I'm telling you, listen, I like Christmas. Christmas is like the one holiday that I like to celebrate. It's fun. And, listen, I the Jonas Brothers, it's not normally my cup of tea, but like, I thought the movie was fun. It was like,
show me your Spotify recap.
I'll show you my Spotify Wrapped after this. There's no Jonas Brothers on it. Right. But listen, I thought it was fun. I thought it was, kind of good production quality. There was like, some good numbers, I was drinking some spiced rum. I was watching Jonas Brothers, holiday movie. I was setting up the Christmas tree in the living room. Right. So I was in the holiday spirit. So I thought that as far as Christmas movies go, if you like Christmas movies, I thought that was fun on Hulu. And then the other one is the third Knives Out movie is out. I've always liked all the Knives Out movies. They're fun. I don't know if you've seen them, but that one's out now. I enjoyed it. Go watch it.
Personality question, sir. Now that we're on Christmas, are you more of a Grinch, Home Alone, or I'm trying to think of something that might reveal your character here?
Like Die Hard?
Yeah, more, I don't know, nostalgic. I'm like a Christmas, like Home Alone.
Christmas Vacation? It's a good one.
Grinch, or I'm trying, like, what is the Nightmare? Like the Nightmare Before. What's your favorite Christmas movie?
Like Christmas Vacation is a good one. I like that one.
Okay, I've never seen that. I'm clearly behind.
Home Alone was probably the best Christmas movie of all time. So
yeah, that's pretty good. Home Alone 1 or Home Alone 2? We're having this debate internally of like
always one.
A movie that
gotta go with the original.
Fair enough. I love Christmas too. My content of the week will be go watch the debate that I did with Hasib and upvote that I want. No, but listen, I self-shield here. I think it was a good debate. I respect Hasib a ton. As worthy of an adversary as we can have in a debate. He is very well trained. He doesn't answer the questions necessarily directly. He's dodging, and he is a phenomenal. He paints a narrative really well. But it was a good debate. I think we're gonna try to do another one. It will serve us well as an industry. So maybe go watch that and put us in the comments of where I did.
One note on that, by the way, is congrats to Thread Guy, who I think is like the new Up Only. So like he's doing a good job.
On that point, Hasib and I were like discussing over the weekend to say, hey, listen, let's do this debate. Where should we do it? And we kind of like landed on the Thread Guy. He's like kind of credibly neutral. And I shouted to him because he let us like rip and he did not interfere. He did threaten to mute us, but he allowed us to kind of make a pretty good debate. I thought it was pretty good, but yeah, go watch that. Let me know what you think.
I was on Thread Guy in July, and I think I was like maybe the first of like the non-meme coin traders he had on, right? And now he's done a really good job, I think, of diversifying the people.
I was like, why the hell is this guy here? I came here to be if I should long Fartcoin, and this guy's talking about stablecoin adoption. Like,
literally everybody in the chat was like, who is this boomer? Like, why is this a boomer? This is so bearish for crypto. When are meme coins coming back? And now you guys are doing a debate. So congrats to Thread Guy.
It was good. All right. Good place ever to end it. Thanks, folks, for tuning in. Rob, I'll catch you next week, I guess.
Absolutely.
Maybe Yana will grace us with his presence, but nonetheless, we'll be here punching in and out. Thank you, everyone. Have a great weekend.